and then you look at the comments and like everyone's actually AOC, and it's I mean that was surprising.
Hello everyone. Welcome to Taxation of Business Entities. Hope everyone had a good break. We're ready to get back to it. I wanted to start with a Beta Alpha Psi announcement. How many people are planning to take the CPA exam? Thinking about taking the CPA exam. Who's planning to take a review course? Okay. So Beta Alpha Psi is our professional organization here on campus. The chapter here is fantastic. The professors who run it have a drumbeat of presenters, and they start right off the bat on Wednesday. So this is about, this is presented by Becker. Becker is one of the large CPA exam review external organizations that's out there. This person has talked to this group many times. She covers WashU, but she's going to be talking about kind of all things CPA exam, about how to approach it, how to think about the timeline to take the exam, and then what services Becker provides. I did take a review course back in the day. I found it very, very helpful. I always like to see things very compartmentalized and structured, and it was an intimidating test. At any point in time, you might have a 50% pass rate. And so I wasn't intimidated by things being difficult, but I like to know the path. How do I get there? And these companies have been around for decades. Becker is one that's active on campus. Gleim is another one on campus. I think they're both equally good, but they know the exams inside and out, and they know what works well, what doesn't work well. So I wanted to benefit from all of that knowledge. And so, anyway, it might be worth your time on Wednesday afternoon to stop by and hear what's going on. Okay. Okay, so taxation of business entities. This is our seminal tax course at WashU. It is the required course for our Master's of Accounting program. I switched that when I joined here because it used to be the taxation of individuals, and I couldn't accept that. The reason why this is the seminal course and the required course for the MAC is because corporations are by far whom you're going to be advising if you go into the tax space, or who will employ you if you work for someone who is doing tax planning. That's not to say individual tax is not important. There are certainly people who practice individual tax and get paid for it, but the number and the complexity of individuals who need to pay for someone to help them on their tax information pales in comparison to the number of corporations that do the same. Okay, so just the likelihood that you're going to encounter corporations, the likelihood that you're going to be either working for one at some point in your career or advising one is the reason this course is so important. Okay, so we're going to spend time principally talking about corporate taxation, and that is the U.S. taxation of domestic U.S. activities of a corporation. How do we compute that? How is the tax administered? All of those things. We're going to talk about tax accounting. Okay, if you've had any of tax accounting in some of your accounting core courses, we're going to go into that in great detail. That is a fantastic career opportunity if you're interested in accounting and tax is kind of interesting to you. If you're fascinated by tax and accounting is kind of interesting to you, this is the blend of the two, and those people are highly valued in the marketplace. They're highly valued by accounting firms, and they're highly valued by corporations to employ them directly, because this is how tax information is presented and reported to the public, the investing public, the regulators, and it is not easy. Okay, you don't just take the tax you pay and that becomes tax expense on the income statement. That's one small component of it, but the interaction of those two is very, very important. So we spend a lot of time on that as well. Secondarily, we spend time on partnerships. Partnerships you will also encounter, just not as frequently as corporations, because corporations, I think, are more prevalent because of the publicly traded nature of corporations. So the big behemoths that we read about in the news every day, they're typically publicly traded, they are corporations. Partnerships are private entities, they are not publicly traded. So you do encounter those, they are extremely lucrative careers as well. There's a lot of private equity, a lot of private investment is done through partnerships. We'll spend time on that as well. It is an incredibly complicated area, okay? And people who practice partnership taxation like it to be incredibly complicated. They get paid very well, and it's like a barrier of entry. Not a lot of people that understand it. So we will scratch the surface on partnership taxation. In reality, it could be its own 3-hour credit course. Partnership taxation, that's the volume of complexity. Okay. Introduction of myself. I see a lot of familiar faces, so I apologize. Some of this can be redundant to you. You can just I'm a professor of practice. What that means is I did not come through academia. I spent my career practicing. I spent 25 years at PricewaterhouseCoopers. You probably know it as PwC, one of the big 4 accounting firms. And I was a tax professional. My specialty was international taxation, but you cannot practice international taxation without having a solid foundation in corporate taxation. Because think of international tax as, I understand domestic corporate taxation, and I advise those companies on investing not just in the United States, but abroad. Or I invest a company investing from abroad into the United States as well. So I have to know domestic corporate law, and I layer that on with international concepts as well. So this is my favorite class that I teach here. There's lots of good stuff we're going to go through. I will try to bring in things from the marketplace as well. So there are things happening all the time. You might think corporate tax is on the back page, but it can be on the front page of the Wall Street Journal very easily. So if there's big transactions that are announced, we're going to talk about it. Somebody makes a big offer to buy somebody, we're going to talk about it. How are they going to buy it? What's that transaction look like? Who pays tax? Who doesn't pay tax? What are they doing if there's no one paying tax? So all of that type of thing we'll talk about, because one of the things I think is fantastic about corporate taxation is not just how do I take the results. So we always file tax returns in the United States, individuals and corporations, on a retroactive basis, right? So we're done with 2025, we're in 2026, so corporations will be filing their 25 tax returns later on in 2026, looking backward. So that's one concept of what we're going to do here is what does that look like? But the world is not static. Corporations don't. 1 year is not the same as the prior year. So there's transactional elements. So if you're a tax person, you're a business person, you're an advisor to these companies, both on the accounting side and the tax side, the legal side, the HR side, the IT side, transformational transactions is also a thing that we're going to talk about here. So my practice was very transactional. I didn't do tax returns. I had people that did those, and that was part of the service offerings that we did because companies have to do that. They have to be compliant with the law around the world. But I also advise transactions. Like, how would you acquire a company, pay the least amount of tax, acquire it the way you need to from a business perspective? How do I sell something, right? Because for every someone acquiring something, somebody's on the other side selling it. So helping both sides of those transactions. But if you get lucky and you either work for a company that's very active on the M&A front, mergers and acquisitions, or you're advising them because your firm, that's one of their clients, that's fantastic. Private equity, fantastic. Always buying and selling things. Those transactional elements are really, really interesting because no two transactions are exactly the same. One time I might be buying a UK company, the next time I'm buying a Mexican company, the next time I'm selling a German company. All those types of things have different issues that are going through that. And that's why it's just really rewarding as a career in the transactional element of that. Okay. I do not have office hours per se. But I'm happy to meet with you at any point in time. Send me an email. A legacy of my prior life, I check emails all the time. So if you want to get together, just send me a note and we can get together and chat. Usually works best for me before class, after class, although I have a class right before this, as many of you know. But Mondays and Wednesdays are going to work better. If not, we can get on a video call. One of the things I do here at WashU that I really enjoy doing, as much as teaching, is just an extension of what I was doing at PwC. I had a group that worked for me at PwC, and the St. Louis office of which I was part of had about 350 to 400 professionals at any point in time. I really took a lot of pride and interest in helping young people kind of progress in their careers. When they first came in the firm to getting their bearings and starting to be very productive, then getting promoted, getting raises, starting their lives in a major way. So now I'm just doing that on campus. It's my 4th year at WashU, so I just feel like I'm doing it a few years earlier before you guys get into the workforce. But I spend a lot of time talking to students just about what area of business are you interested in. Obviously, I specialize in accounting and tax, but I talk to other business professionals beyond that. But it's kind of helping you think through, where can you get started, what makes sense for you, helping you chase internships, chase full-time positions, hopefully evaluating different full-time offers, those types of things. So happy to do that with you as well. I'm in a unique position now that I've been here 4 years, so it was ironic over the break. I was talking to some freshmen and sophomores who I had just met about, I heard about accounting and what, can I talk about it? So I'm meeting brand new faces, and then I had people that just graduated and getting ready to start their careers and saying goodbye to them. So it's kind of bittersweet seeing new people come in and people kind of launching as well. So I'm happy to do that with any of you as well if you would like that. Okay, I want to start with a couple polling questions just to get some. Okay. Try that QR code. And so just tell me what your level of prior tax experience is. If it's none, that's fine. If this is your first tax course, that's fine. If it's moderate, what I mean by that is, have you had a tax course before? Have you done your own tax return? You help your parents with their tax return? Have you had an internship where it's kind of related to tax? And more than moderate, probably had a job or you're going into tax, you've had multiple tax courses, but just kind of curious as to where the class stands. Okay, so I'll just start weighing in on this. So for those of you that have none, you're perfectly fine. None is expected here. I'm assuming you've either had 2610 at WashU or you've had the equivalent, which is just your intro to accounting course at your undergrad. I had another institution, an undergrad from WashU, master's program. Why I need that is I need you familiar with an income statement, right? Taxable income is premised on income statement. Okay. So what's interesting, those of you, how many people have taken taxation of individuals? Okay, many. Remember what we did? We started off that we had to build the income statement. We started talking about what's in gross income, what expenses are deductible. And we were building that income statement / taxable income. Well, what's different about a corporation or a partnership? That already exists. I have an income statement, right? Because they already have it in their business. Now, we don't just take that because the tax rules are different than accounting. So, but we leverage off of that. So we have a starting point that's different than an individual. An individual, I have an income statement. I love spreadsheets, so I do my own budget, so I have my income and all my expenses. Most people do not do that. They might have a loose budget or something like that. But it's different in the business world because we have something we can leverage off of and start using that and piggyback off of it, right? Why not start with that? I already got revenue. I already got expenses. I just see which revenue is different from book to tax and which expenses are different from book to tax. And when I say book in accounting, I'm referring to the same thing. It's financial versus tax. I use different terms. Those that are moderate, probably a lot of you that have taken taxation of individuals, that will help you. It's not a prerequisite for this course, but when we start off and we start talking about what's taxable income, what's gross income, what's deductible expenses, you'll see some parallels. It's not the same rules, different. We tax corporations differently than we do individuals. But remember when I was talking about in taxation of individuals that gross income includes income from whatever sources derived? It's the same rule in corporations. That's just because they write those rules very expansively, right? So they want to capture all the income. The expenses are different, vastly different than individuals. Okay. More than moderate. Can I? Somebody raise some hands who did that? Because I'm just curious as to what you've done. Yes, sir.
I've had like 8 tax courses between here and my undergrad, and I've had a job. So
Perfect. Perfect. So you're going to be highly participative. Anybody else? Okay. So we'll ask Jared.
or don't.
Okay. Okay. All right. Let me go back to.
Classes.
Okay, try this one. What word comes to mind when you envision someone having a career in tax?
I was like, late season.
Okay, I'm just going to start grabbing some of these. Law, clearly. Tax is based on law. Okay? Distinguish that from accounting. Accounting is based on principles and standards from standard setters. I like to think of it as accounting moves slower, right? Because to change a standard, to change GAAP, generally accepted accounting principles, it just lots of evaluation and input. It just moves slowly, right? Probably on purpose. We probably want it that way, right? We don't want accounting to flip on its head. And because we're looking at comparability over years and comparability amongst companies. So that kind of lends itself to that comparability. We contrast that with tax. Tax is law-based, right? All it takes is a new law. Get the votes, get the president to approve it, sign it. It's the law. It's a new rule. So it moves much quicker, right? Just who's in control. We're going to talk in a moment about the big piece of legislation we had last year, the One Big Beautiful Bill Act that was passed in July 4th. And so that changed a bunch of things as well from on the corporate side. And it was actually part of the individual tax changes. It was all one bill. But there were individual tax changes, and then the corporate tax changes were on the same thing. And those corporate tax changes were largely corporate favorable. And that was because these companies are very adept at lobbying politicians, and so they were able to get these provisions restored, basically, back up to pay the least amount of tax. Clients, obviously clients, because you're dealing with corporations, so I like to think of it as the word client in a couple different ways. One, if you're working at a firm as an advisor, and your clients are largely, I'm posing going to be corporations in this area, they are your clients. But if you work for the corporation directly, they hired you so you work in their tax department, you have a client. You just have one client. It's the corporation. But guess what? There are some really good one clients out there. They're doing stuff all the time. Very active, very engaging from a tax perspective and a transactional perspective. Careful, yes, very detail oriented. So I'm going to drag you into details. I had one question during the break between classes about if you had tax and business strategies in the past. That course is very high level. This course is going to be a little more granular. We're going to get into how we compute corporate taxation, and just like we did for taxation of individuals. It is rigid, okay? I would say rigid from a perspective of the law is the law, but there's a lot of gray area out there, okay? Business transforms quicker than the law. I always think the tax law is always trying to catch up. So right now the government's still trying to catch up with all the cyber currency transactions going on. Monitoring it, reporting it, and how do they track all this stuff? They have rules where it's taxable. So if you're doing the stuff on your apps, you're doing the transaction every time it's taxable. I hope you know that. But the government's having difficulty kind of capturing all the information. So what the government does is they typically enforce those things via the financial intermediary that's involved and has them report the transactions on your behalf so they can flag it and make sure that you're reporting it. M&A, fantastic. So M&A is mergers and acquisitions. It's a very broad category, but it's a transactional activity. Okay? These are many times life events for organizations. Careers are bet on these things where there's the more zeros, the more careers that are on the line, right? You spend $10 billion on an acquisition, that's got to work, right? If it doesn't work, career-limiting moves were made, right? So tax plays a role in that, just like all other parts of an M&A transaction. I like to think of an M&A transaction as, let's just say one big multinational is buying another multinational, so they're coming together like this. That may be all over the globe, where they're in 20 similar countries. There's legal, there's IT, there's business, the sales, there's manufacturing footprints. All those things have to be coordinated. And tax is one of those. So usually you have working groups that are doing all this, but tax is a key driver in those transactions because when you put the organization together, the two groups that are going to be most involved in that are going to be the legal team because they're executing the transaction and the tax advisors telling everybody how to do it. Because you have to put it together in a certain way to get a certain tax answer. If you let somebody else do it, then the tax answer is what it is. You have to be proactive on the tax front to get the answer that you want. So that's why you see tax and legal kind of leading those designs, and you see massive PowerPoint slide decks, which is all the steps on how to do these things. And what I've also found is this requires a big project management because you have all these different parts of the organization, HR, Treasury, IT, all that stuff has to come together as one. And usually the accounting firms kind of want to take over that role because they have project management people. I had people that worked in my group that were fantastic project managers, like herding the cats, like just getting all of these people on a weekly, daily basis going in the same direction. So M&A is clearly a big part of these things. Repetitive, I will mention that there is a repetitive aspect to accounting and tax, right? You have to be compliant. This is not an optional thing. If you're a corporation, you file a tax return. You pay tax, right? So there is that compliance aspect, which is reporting your results for the prior period on a tax return and submitting it to the governments in which you do business. That does not mean that that's all that's going on, right? That's just the reporting. Just like reporting to the SEC, right? your financial statements, reporting to the public markets. All that stuff has to happen. That is, there's a repetitive element to it, but the facts are different. Again, the business is not the same. Okay. All right, one more. I've mentioned this one, so those of you that have had some of my courses, you may think you know this, but okay. Who pays tax? Okay, so many of you remember this from my prior courses. And I tweaked the language a little bit here for who pays the tax. We're going to be talking about corporations, and we just posed to you that corporations certainly pay tax. Who bears the burden of that? Okay? All the individuals. And where do those individuals interact with the corporation? They could be investors. So if we pull tax out of the corporation, make them pay it, there's less that goes to the investors. You could be an employee of the corporation. If we pull money out of the corporation to pay tax, there's less dollars to pay salaries and bonuses. And you could be an investor. You could be so that at the end of the day, what I pose to you is it's individuals are the ones who have to bear the tax. Corporations are legal fictions. Okay, we'll talk in a chapter 4 material, which we start with chapter 4 on Wednesday, not chapter 1. I think we should start with an overview of business entities first. But we talk about the formation of corporations. Corporations are formed under state law by filing paperwork. Like, I want to start Jeff Plunkett Inc. I can do that in the state of Missouri, probably in a day or two online. Okay, but that it's not real from a perspective. It's real from a legal perspective, but I'm the only thing. If I'm the only employee there, I'm the only thing that matters in that business. And so I have had instances where, and this is an example of it's had a history with WashU as well. Peabody Energy is a large natural resource company in St. Louis. It used to be called Peabody Coal. We changed your name to Peabody Energy because that's more not as dirty as coal. But we use coal every day, right? It supplies a lot of our energy, keeps the lights on, and the infrastructure going here. Many people would say we need to tax that company more heavily. They should pay a higher rate of tax because what they're doing to the environment, right? They're taking things out of the ground and using them. But I would pose to that person, well, what does that accomplish? Does Peabody Energy really pay tax? Or do the individuals associated with Peabody Energy bear the cost of that? So the other one I mentioned is your customers, right? So it's your employees, it's your investors, and it's the customers. What if Peabody Energy said, fine, you want to raise my tax rate, but I'm just going to raise the cost of coal? Do you want to pay more for your electric bills every month? What if they said, okay, well, we're going to have to lay off people? Do you want people to lose their jobs? What if you say, okay, we're going to cut the dividend that we pay to our shareholders? So again, all of those tentacles ultimately find themselves to individuals. It's a great paradox in the United States, and I think around the world. People think corporations are these big bad animals in and of themselves. But really, they are legal fictions that society has agreed can be separate entities, if you will, but they don't pay tax. Dogs and cats don't pay tax. Tables and chairs don't pay tax. We pay tax at the end of the day. Okay? So What is interesting is the mechanism in which we collect the tax. We've decided that we want to collect some of the tax from corporations, right? That's a longstanding kind of principle in the United States and around the world is we think corporations should be part of the tax-paying public. That's fine. I'm just saying, individuals pay tax, corporations pay tax, but just remember that all economically the burden falls to individuals. I think it's completely interesting because we spend all this time engrossed with corporate tax, and legislatures spend all this time about corporate tax and calling these CEOs in front of them to testify before Congress and everything. And it's a lucrative career, as I've mentioned. But at the end of the day, they don't really pay the tax, the burden of the tax. So, okay. Thank you for doing that. Okay. Okay, so just a little bit about the tax curriculum for those that I haven't met or seen a lot of our tax courses yet. So we're in taxation of business entities. This is our seminal tax course. We also have 3 other courses going on in the spring. We have the Volunteer Income Tax Assistance Experiential Learning course, which will get kicked off for those of you that are in that course. So it'll really get kicked off in a couple weeks. But that is where knowledge that you gain in taxation of individuals is actually applied in the marketplace, working with the local nonprofit, helping lower income individuals in the St. Louis area be compliant with filing on a tax return for the 2025 year. I really like it because it's applying those rules in the real world. So you're going to be dealing with people. They are not tax experts. They are elderly people who are getting Social Security. They are people who have a job. They are people who have families, and they're just bringing you their stuff, saying, "Hey, I'd like to get the biggest refund possible. Will you help me?" And so it's a really good application of the rules to the real world, get you out of the WashU bubble, and really see how things work. It is a experiential learning course with a nonprofit. So that nonprofit actually runs this. I support and oversee the course, but we don't meet as a group. You go do that separately. There is a layer of review of your work. So there are other people that review your work before it gets signed and sent off to the government. So you're not there out on your own just winging doing tax returns. We also have international taxation that just started right before this course in this room. That mini A, and that's followed by advanced international taxation. Those courses, this course is a co-requisite for that course, those courses, but it's basically taking domestic taxation of corporations and then applying it in an international context, meaning that very few large corporations operate solely in the United States. It's just not practical. In my career, I grew up with Panera. Panera started as a St. Louis company. You guys maybe still see a St. Louis bread company. So they rebranded to Panera as their name. But they started expanding in the United States. They went coast to coast, north to south. And they were in every major city. Then their big issue was, can I take this business concept, this feeling that when you walk into Panera and do it in Canada and do it in Mexico? Can I do it in the UK? They were actually looking at the UAE as well. And so I don't work with them anymore. I don't know how far along we've gotten in that. But that's an example of you ultimately get too big for just the United States over time, right? And companies are always going to chase customers. Where can I sell the next big deal? From this perspective. If you're a manufacturer, where can I make the product more efficient? Where are other customers that I can choose in my particular business? So that's international taxation. It's taking it and going cross-border. Okay? And then we have taxation of individuals, which will be offered again in the fall, and tax and business strategy, which is much more of a light touch on tax, but how it fits in business decision making. So I use that course for like CFOs or controllers that want to know a little bit about tax but don't want to be into the details of what you're doing in this course. Right? So it talks a little bit about the role that tax plays in the business without publicly Okay, if you've had my classes before, you know I like pie charts. For those of you that haven't had my course yet, think of this as the net income of a corporation. Okay? Sum total of that being the pie. The corporate tax rate in the United States is 21%. That's the easiest thing you're going to know in this course. Because guess what? It doesn't change. If you make $1 of taxable income, you pay 21 cents in tax. If you make $10 billion, you pay 21% in tax. So it's not progressive. You've taken taxation of individuals, you know we have a progressive tax rate system, meaning that the more money you make, an incremental dollar is taxed more heavily than the first dollar is taken. We don't do that in the corporate world. So it's just flat 21% across the board. What I want you to take out of this is the pie with the gray slice there that the federal government takes at 21%, they are a partner in your net income. This is the way I think most CFOs view tax. Okay? That partner in your net income is extremely powerful. They write the rules that tell you how much of the pie they take. Tomorrow they could say, we want to take 28% of your tax. They can do that. They get the votes, you get the president's signature, they can do that. They write the rules on how you compute the base, right? Not only do they write the rules, but they enforce the rules. The Internal Revenue Service, the IRS, is a bureau of the Treasury Department. Their task is to enforce the laws. And don't think of that as a true adversarial relationship. I think the IRS has a Hollywood perspective from movies and everything, that they're grabbing you by the ankles and taking nickels out of your pocket. No, they are professionals. They are just making sure that people are compliant, right? We have a self-reporting system, which means you have to report your own activities to the government via the filing of a tax return. So one of the premises of a self-reporting system is we need to make sure, we need to have a feeling in society that everybody's following the rules, right? If I thought half of you were cheating on your taxes, I start thinking about, well, maybe I can fudge a little bit on this tax return because everybody's doing it, right? So the IRS is there to be enforcing compliance. They don't make the law. Congress and the president make the laws. They just enforce the laws with your facts. Okay? So that's a very powerful partner in your net income. Okay? CFOs and business leaders want to keep their share of the pie as big as possible. Why? That's more money that they can invest in their businesses, research and development, new products, new employees, expansion, M&A activities around the world if they can keep more in parts of their pie. I'll tell you a quick example. I was going through a period in my career where I thought, okay, this is really fascinating stuff. I'm doing well, but is it the most purposeful calling in the world? As I feel like I'm just arguing about money every day and allocating capital around the world. Because I'm helping multinational companies as to where they're paying tax and trying to pay the least amount of tax as they can within the confines of the law. And I mentioned that to a client, and she's like, because my perspective was, well, should I have been an engineer or a doctor or something where an engineer is building something for society that's lasting and very helpful, or a doctor that's helping people with their lives? Instead, I'm just arguing about dollars and cents. And she stopped me for a moment and said, no, what you're doing is you're helping our company keep more of its money to invest in what our purpose is. And that company was a biotech company. And they were international, and they were trying to lower their tax liability around the world, which meant they had more earnings to invest in their business to do the things that they were doing, which was good for society. So if you're looking for rationales, that's how it got comfortable in my mind. That, okay, well, there is a purpose element here. Again, no one's breaking the law. It's just, can I be smart about it and pay the least amount of tax that's legally due to keep the most money in the green part instead of the gray part? Okay? This is a pie chart that's the source of federal taxes from the perspective of the United States Treasury. So where does the revenue come from that goes to the U.S. government? Okay, and what I want to pose here is look at this blue section down here. That's corporate income tax. It is 9.3% of the pie. And I'm posing to you that that's where you spend all your time and effort as a tax professional. And I talked to you earlier about the economic burden of the tax doesn't even fall on the corporations. It just gets passed through to individuals, either in less returns as an investor, less income as an employee, or higher prices as a consumer. But corporations have this view from the public that they're not paying their fair share, right? I think if you went out and you talked to the average person in society, they would think, well, corporations should pay more, especially if they find out and knew that they pay 21%, whereas the highest corporate or highest individual tax rate is 37%. I think most people would think, well, Microsoft and Meta should be paying at least 37%. They should be paying the highest rate that's out there. But look at the individual income tax. Over 50% of the pie is individual income tax. Employment taxes are borne by the employee on the employer-employee relationship, on your compensation. So that's a little over 80% comes from individuals. Directly from individuals, and I mentioned the other kind of pass-through components of that. So it's just an interesting paradox that there's all this time and effort and angst over corporate income tax, and it's really a small part of the pie, and they don't pay the tax anyway. I think they collect it and remit it to the government. The thing to keep in mind here is, as well, we run deficits in the United States, which means on a current year basis, we take in less revenue than we have expenses as a government. And you do that over multiple years, you have debt, national debt. So anytime the government starts thinking about how do we address lowering the national debt, think about this pie. If you focus on that blue sliver, that's 9.3%, you're not going to move the needle that much. It's individuals. It's the left and the right side, the individual tax and the employment taxes, if you really want to increase the revenue that comes in to repay that. What's the issue with that? Those are individuals. They vote. Very few politicians want to run on a campaign of, I want to raise your taxes. That's a really good way to have negative ads by your competitor on TV. Right? My competitor wants to raise your taxes and lower your standard of living. Right? So I think that's part and parcel of why we're in the situation that we are. We don't want to make those hard decisions. And your generation is going to have to come to grips with that and see how we're going to repay that. Okay, a couple of career items, because again, I want to not just talk about corporate tax, I'm talking about the profession as a whole. I do careers in accounting videos. I bring, maybe I've been in some in front of your 2610 courses here at WashU. I bring practicing professionals in from the marketplace, and we talk about how they got involved in accounting, what do they do in accounting, and the goal there is to try to address some stereotypes of what accountants actually do and what tax people actually do. Because again, I think this is the Hollywood mindset of they're very conservative, they sit in the room and they head down and they're cranking numbers and gotcha, I gotcha, you messed up, I gotcha. But we do have the Ben Affleck movies where he's out shooting things and all kinds of crazy things. So the truth is in the middle. It's not. It's somewhere in the middle of those two things. But to hear the stories of these individuals as to what they actually do, it's pretty fascinating. And so I do have a YouTube channel where I collect all these people on the right. Many of them are WashU alums, but I have them organized on the right there by audit, tax, and consulting. Those are the three major divisions in most public accounting firms. And you just kind of hear how these people's careers evolved. And I wanted to capture those stories so you guys weren't just hearing my perspective, but I want you to hear other people's perspective. as to what they do. So there might be some things in there that might be worth thinking about. The last thing I'll mention on this front is a salary survey. So this was done by Accounting Today. Accounting Today is a trade publication, and basically kind of gives you the pulse of the profession. And so it's really good. Lots of stuff about CPA exam, lots of stuff about the pipeline issue of getting young people into the profession. And AI is a really hot topic that they're going through now. But they did a salary survey, meaning that they went out and sent surveys affirmatively out to practicing accountants saying, tell us about what you make, where you work, and then we'll compile all that data. And so it's a very, you can find it right there on the bottom right box there. But very fascinating stuff. So a couple takeaways from that is starting salaries are going up in accounting. I've heard stories of $10,000 across the board at many firms. The salary ranges are from 75 to 85, roughly. That's the median to 75th percentile. The manager level, which is a pretty seminal level in an accountant's career, that's usually about a 5-year progression on a normal timeline. But that's where you start having ownership over an account. You're the manager of that account, meaning that you have responsibilities to the partner, you have responsibilities to the client, and you have people working underneath you. So yeah, I always said it was one of the most toughest positions. You get pulled in all kinds of different directions and stuff. But that's why once you get that on your resume, it's a really good title to have, because future firms or future corporations know that you're really good. You fit in that kind of hot area of having to deal with lots of different situations. So that range is about 130 to 160 at that level. That kind of syncs with the group, the team that worked for me. That's about what we were paying, maybe a little bit more on managers in our group. And then the last point I'll mention is that partners at big four firms, it's not unheard of to have an annual salary in excess of $1 million. And I don't think young people know that. And that's not to say that everybody makes partner, but on the path to partner, if you choose not to stay and make partner, which is the timeline for partner is I'm hearing about 12 to 13 years now. It's been extended out a little bit. And that's not just simply a time and grade that you get promoted to that. After you've been there that amount of time, you have to have developed some skills around either you're a business developer, where you're bringing in clients, or you got a specialty skill set, or you got a client or two that's really big, that really likes you and pays your firm a lot of money. Those are things that differentiate you and can get you to that next level. But it's a carrot that's out there. I will tell you, I saw a lot, my last partner meetings 4 years ago. I would sit in the room and there's a bunch of gray-haired people sitting around, and that was before the stock market's kind of ripped the last 3 years. So I knew people were halfway out the door, but once the stock market takes off, the spreadsheet starts looking a lot better, and I want to go play golf every day instead of doing this stuff. So what I pose to you is that this work is not going away. The importance of the capital market system and the reliability of financial statements and the complexity of the tax world and then the consulting world that comes with it. These firms do every part of consulting for any part of business, is not going away. And I think the leadership is moving on. People want to go fishing, they want to go golf, they want to go some teach, but there's a whole layer of people leaving, and who's going to take those roles? I think it's young people that choose to go into the profession, and it can be life-changing. I retired at 53. I didn't have to work. I choose to work because I like doing this, and I like a little structure in my life. But it is possible. So I don't think people realize the compensation levels you can get. And many of the people that are CFOs, financial leaders in corporations, came through accounting firms. They just didn't go to partner. They just jumped somewhere in that 13-year frame. They went and got hired by a firm, and they have stock options doing very well. And so there's some very lucrative careers. I'm happy to talk to you about any of those things. If you want, just send me an email and we'll schedule. Yes, sir.
I just want to ask, so I know I've heard that people who go into audit are generally more likely to go into those CFO, financial leadership roles. Is there a pathway for that through tax?
Yeah, so great question. So I do think so the first fork that you'll find in the road is usually audit or tax, because those are the major groups that hire directly from campus. Consulting is now somewhat more so than it was in the recent past, but consultants usually come from those two groups after they get a little bit of experience, because I always like to think you got to be a consultant, you got to have something from which to consult from. If you don't have a lot of experience, it's hard to be a consultant. So audit or tax. So the question was, to get to the highest financial roles in a corporation, is it you need to kind of go to the audit path? And I would say that's the traditional avenue, and that's because of the core nature of financial reporting. That financial leaders, they sign the tax or sign the financial statements, right? In front of the SEC, they're like representing to the world. The CFO is doing the quarterly earnings calls, so they have to be masters of the numbers, right? And so that kind of lends itself to companies like, well, I want that kind of knowledge, right? But that's not to say that tax people don't get to those levels as well. The mentor I had at PwC was the best partner I have ever dealt with. He was super creative, very amicable with any client in any situation. They all gravitated to him, and I thought I'd work with him forever. He left PwC when I was a senior manager, and he left because one of those M&A transactions he did, I think this was 2002. Procter & Gamble, the big consumer product company that we all have stuff in our bathrooms from Procter & Gamble, bought Gillette, which was the shaving company. So that was one multinational buying another multinational. It was one of the top 10 transactions to ever be consummated at that time. And he was the lead partner running that implementation for PwC. He did that for a year and a half because it was just an enormous transaction. We had so many people working on it, but he was the top person. What happens in those engagements is the clients get to know you really well, you get to know them really well, and then if everything goes well, they usually, not uncommon that they come to you and say, hey, instead of us paying PwC who pays you, why don't you come work for us? And so they made him an offer and he went there. He started off as the number 2 tax person at Procter & Gamble, but the number 1 person was set to retire in short order. But he's since moved off of, to answer your question directly, moved off the tax track, and now he's the treasurer for Procter & Gamble. So he actually signs the financial statements for our top 5. He went to Switzerland because they run their non-U.S. business out of Switzerland. So they moved to Switzerland for 2 years or something, back in Cincinnati. So that goes to those stories I'm mentioning about how accounting, you never know where you're going to end up from where you start. It's just amazing. But it really just depends on how well you do and the skill sets you develop as you move forward. I would, to answer your question directly, it does stem from the audit side probably more than. Okay, so in this course, we're going to start with Chapter 4. Please read Chapter 4 before Wednesday. It's an overview of the business entities. I want you to kind of start understanding the key distinctions between corporations and partnerships. It's also going to talk about S corporations. S corporations are a hybrid. They're kind of in between a corporation and a partnership. An S corporation is a corporation. It's in its name. But it's an election under subchapter S of the Internal Revenue Code. And it's basically treated a lot like a partnership. So it's kind of in the middle of the two. So we're going to spend a little bit of time about S corporations as well. But I kind of like giving you that overview first before we just start diving into stuff. Then we're going to talk about topics common across business entities. So it's going to be business income, deductions, and accounting methods, which are going to be some very similar concepts between corporations and partnerships in that. Then we're going to talk about property acquisition and cost recovery. This is depreciation. So when you buy an asset as a corporation, you get to depreciate that asset over time, meaning that you take some of that cost and you record that through your taxable income as a deduction for depreciation expense, just like accounting, but the rules are different. Accounting is judgment based on useful life, right? Management's judgment. You probably have read a lot of the noise in the marketplace about these data centers that are being built and the recovery that their companies are putting on those assets, that are putting billions and billions of dollars in CapEx, how they're recovering that through. Some skeptics are out there saying they're inflating their earnings by taking too long of a life. In the tax world, we have specific rules. This asset has this life, this is the exact amount of appreciation you get over time. And the government loves to mess around with depreciation. They did it in one big beautiful bill act, and companies know that they love to mess with it, so they always ask for it. If they did it once, they want it again. They're like, hey, let's do that thing again. So that's what they were able to do in one big beautiful bill. We'll go through that. And then property dispositions. Assets get sold, so how do we determine the gain or loss of this transaction? Then we're going to dive into the meat of the taxation of corporations. I like to think about this as kind of a timeline of a corporation. Think of it about when we form it. How do we do that? What's the tax implications of doing that? How do we operate it? Functioning, it's running, it's doing business, so how does our income go in, our expenses go out, how do we file tax returns, how do we do our accounting for income taxes, how do we translate what we're doing from a tax perspective into the financial statement world and record those entries, and then how do we make distributions? Ultimately, we're going to make money. Most corporations aspire to make money, so beyond what we reinvest in our business, we might want to make distributions to our shareholders. Those could be in the form of dividends, share buybacks, stock buybacks, those types of things. How do we keep those monies out and what are the tax implications of that? And then corporate reorganizations. So reorganizations can be M&A activities, so we're acquiring things. We can either do that taxably, meaning somebody in the transaction pays tax, or it can be done non-taxably, where if we do the transaction in a certain way, nobody pays tax. The government has rules on what is taxable and what is not. We can choose which one we're in within the parameters of the business deal. If the seller only wants cash, they're likely going to have a taxable transaction. But if it's a Procter & Gamble and Gillette transaction, we might be able to do that in a non-taxable transaction if we structure it the right way. That's why tax people take the lead in transactions. Because if somebody wants something to be non-taxable, and that's important to the economics of the deal, you have to let the tax people get in front of that. You can't have legal and other people start structuring things and coming to agreements on things because it might frustrate the ability to make the transaction non-taxable. Okay? And then we're going to end with liquidation. So, not all corporations liquidate, but you might come to a point in time where the corporation ceases activity and you want to wind up the business, meaning that stop doing what you're doing, distribute all your assets up to your shareholders. You do that in a taxable or non-taxable. Then we're going to spend time on partnerships. That'll also be kind of a timeline format. How do we form a partnership? How do we operate the partnership and report the results? How do we make distributions and dispose of partnership interests? And then hopefully we get to, right at the end, taxation of S corporations, which is kind of that in-between area. Legal corporation, but taxed similarly to a partnership. Okay. One of the things you'll find in the U.S. is the business community is very adept at wanting the best of both worlds. So there's benefits to corporations, there's benefits to partnerships. There's disadvantages of corporations, there's disadvantages of partnerships. So inevitably, business leaders go to the government and say, well, I want the best of that and the best of that. Can we do that? Get the right audience, yeah, we can do that. So things like the S corporation regime go online, you think about LLCs and things like that. Those are all kinds of hybrid type arrangements where the business community is getting the best of something in a hybrid relationship. Okay, textbook format. Yeah, taxation of individuals, it's the same authors, so it's very, very similar. I really like these authors. Textbook is fantastic. Please get it and read it before class. It tells you the rules in narrative form and then applies those to examples. We're going to leverage a lot off of those examples. It's really nice because it applies it to facts. Facts is always about taking the law and applying it to your facts, your client's facts, your employer's facts. Okay? So we'll use the textbook to guide us through and provide some structure. The class format will be like my other classes if you had them. It will mainly be following slides. I spend an inordinate amount of time on slides. You guys are benefiting because you've had 4 years of this. I build these things. I cannot look at a slide and not make an edit to it to make it better. And I constantly do that because it is my way to communicate information to you. It's the way in the real world I was communicating with my clients. PowerPoint was the mechanism in which you do transactions. You depict transactions. You show it with arrows and transactions. What ownership is moving. Analyze that or analyze the options. That's the way you had meetings. That was the document we used in front of our clients to talk about transactions. So we will use the slide decks to kind of lead us through this. It will be lecture, but I don't think of it more as lecture. I'm just kind of guiding you through the material. I've been through it and understand the material more than you do. So I'm just kind of leading us through that journey of that. We will periodically, you will come down and do an example and present an example to our class. I will be sending out a shared file where you can sign up. It's optional. And I don't cold call on anybody. I don't assign you to do an example. It's up to you. I don't do this to be mean or to get you out of your comfort zone. I do it to get you out of your comfort zone. I want you come up in front of class, have eyeballs looking at you, talk loud enough and clear enough so everybody can hear you, and walk them through the example. Now, I prefer you not to just read the example. I want you to kind of present the facts, present the rule, and here's the conclusion. It's all right there in the textbook. You cannot get this wrong. It's impossible. Okay? But the reason I do that is I don't think there's enough of you getting up in front of people. And I do that because when you start your career, you're going to have to do that. You're going to have to be good at communicating in a group setting. And so I want you to be comfortable in a conference room with a perspective and say something. Okay? I've seen many young people come into my group who are super smart, who are very shy and quiet. And that's fine. But just understand that if that's you're predisposed to that, which I was, I'm very much of an introvert, that in the marketplace, that can come across as you don't have anything that inputs the conversation. And I know that's not the case, and I don't want you to do that. So in a safe environment where nothing can go wrong, I want you to practice it. I'm here to tell you, you can get better at it. You just got to do it. So that's the goal of that, and that'll be part of your class participation. It's 15% here. The other way to get class participation is to talk during class. Not talk to your neighbor, but raise your hand, ask a question, make an observation, say if you don't understand something. So I want you to think of it as both ways. The students who do really well and get full credit in this area are doing both of those. And again, that's just, I want you to, part of my goal is to not just have everybody sit comfortably in their chairs. I want you to start becoming a professional. A professional is somebody who engages and interacts. And I know it's hard to do, but believe me, if you learn, you can get good at it. So finishing off the grading, class attendance, we'll have a sign-in sheet. That'll get passed around every day. Sign in. Please only sign your name. Do not sign in for a friend. Do not ask a friend to sign you in. Those are both unethical practices. Don't even get started doing that. I don't want to chase you. You don't want me chasing you. Saying, I don't think you were here and I see your name, something written on your name. So just don't ask. We have 2 exams, midterm and a final, 30 and 45%. I do not do assignments. Mainly the reason I want to maximize your time. I'm going to talk about your time allocation in a little bit, but to me it's not a good use of time for me to send something with you, take home, and I get 60 of the same responses back. I don't think that accomplishes a whole lot, right? So I want to treat you as adults. I know the technology's out there and it's fantastic. I use it myself. And I'm going to talk a little bit about how I think you can use it in school, but I'm not testing who can use the large language model the best. Okay? So my exams are in person, no electronics. You get a page or 2 of notes. We'll talk more about these as we get closer. Those are meant to approximate you going to a business meeting, right? You're not going to be able to sit in a business meeting, sit with your partner or your manager or your client, and they ask you a question and you turn around and type it in and then speak it back out from what the computer tells you, right? So you're not going to be able to do that. So there is a place and an area for that, but it's not for this. So no electronics. I want you to walk in like you're in a meeting. I used to bring notes to a meeting. They never committed everything to memory, but if I knew we were going to talk about certain things, I had stuff jotted down. That's the same concept as taking the exam. You know there's going to be questions posed. We'll talk a little bit more about what you can put on the notes as well. The test format will be about 2/3 multiple choice and 1/3 short answer. It'll be very similar to the examples. If you're a student applying the rules that we talk about in the examples, you're going to do fantastic on the exam. I don't try to trick anybody. It's just about being able to apply the rules. Okay? And I do that in that format because I want to test you all amongst yourselves as to who's put the most effort into the semester. Okay? Emergency response. I talk about this. I don't want to, but today's environment we have to. This is if there was an emergency in the classroom or on campus during our time together, I feel like I have responsibility for you during our time. So I do attend the active shooter response training at the university. That is taught by WashU PD and St. Louis City PD that come in there. So they say 3 things to active shooter training. Okay, is if something were to happen on campus, right? Our phones would be blowing up. Hopefully you all have the WashU alert on your phones, but I'm sure it would just be absolute chaos. And this stuff happens, right? You see it on CNN all the time, unfortunately. And we know we have a very open campus. Somebody could walk in from the streets into these buildings pretty easily. That's the choice the university has because we're very open and inclusive, but there's downsides for that. So, the 3 things they talk about is run is the first option. So if you know where the threat is on campus, obviously you could go the other way, right? So we're lucky in this classroom that we know we can get outside the building pretty darn quick, right? If we knew something was going on the other side of the quad, we can just bolt out the other way. But that presumes you know which direction the threat is coming from. Probably unlikely that we'd have detailed information right off the bat, right? It'd probably be pretty chaotic. So, absent knowing which direction to run, because you might run in the exact opposite direction. The second option is to hide. And the idea is to get underneath the desk, try to look like this room is vacant. Somebody, if they stick their head in the door or look through the window, experts are saying they would probably leave if they didn't see anybody. Right? This is not your normal lucid person acting rationally. They're looking to do damage, and if they don't see anybody, they might go elsewhere. The third and last option of last resort is if somebody were to come into the room, then the idea is to fight. And the thought is, look at all the stuff that we have on our desks. We have laptops, we have water vessels, we have phones. If somebody came through that door, if we 60 people threw things at that person, maybe we could knock them off their bearings a little bit to where somebody could maybe grab them and subdue them. But that's last course, right? That's where we have no option to do that. But I think it's just good to think about all the things that we do have and what can we do to throw that person off? And again, you're probably talking about one person who's not in their right frame of mind. Could we knock them out of their sequence a little bit? So I hate to go through that, but again, you never know until you know. Okay. So okay, I'm going to leave you with my best practices for student success. If you've heard this before, I'm going to say it again so that you guys hear it again. But there is a rule of thumb that for every hour you spend in class, you should spend twice that outside of class on that class material. Okay? So you can either follow with that or you can accept that. But there's some element of multiple of hours outside of class leveraging what you do in class. So let's just talk about what an average week is. And I can guarantee you will get a good score in this course. And you will, more importantly, learn this material if you do this. And I bet you this is leverageable to your other courses as well. So let's just round up our time. 2 classes a week. We spend 3 hours together every week. During those 3 hours, can you focus your attention? Not be looking at other things on your electronics. I understand many of you take notes on your electronics. I'm all for that. But shut down the other stuff. Don't have a soccer game in the corner or DMs popping up. Just ignore that stuff during the time we're together. The reason I think this is important is not just for class, but in the real world, you're not going to be able to do that. You're not going to be able to pick up your phone every 5 minutes in a meeting. If my team was doing that, I'd be saying, excuse me, you can do that on your time, not during our time, okay? So just, I think it's a skill set that you can develop where you can just like, okay, I have that part of my life I can do at that part of time, but now I'm going to invest in this, okay? Avoiding that technology distraction, I think, is a key. A story I'd like to paint for you. Think about who is the most important person to get you where you are today. Parent, grandparent, a mentor. Then think about them sitting right behind you with whatever you're doing at that particular moment. What would they think if they saw what you were doing? I just think that's a very impactful picture to think about. They worked really hard, you've worked really hard to get you here. Did they do that and you do that so that you watch a European soccer game? And if you think that you're multitasking, you cannot. I have read papers where the human mind, by experts in research, cannot multitask. It is impossible. What you do stand a good chance of is doing 2 things imperfectly at the same time by splitting your attention. So don't think like, oh, I'm hearing him while I'm doing this or that. It's not sitting on the couch playing with your phone while you're watching a movie. You can do that. Tell me if that works for you. But I think for learning material, that's not going to work. Okay, so just, you're not special. Experts at the company. You look to participate. Look for opportunities to have input, to raise your hand, or connect a concept, or ask a question, or any of those things, or to do an example, or those types of things. It's really important, I think, is just be ready to. Okay, so that's our time together. Just asking you to be present, focus. I think it's a small ask. So then, that's 3 hours, so you owe me 6 hours if you abide by the 2-to-1 ratio. So, I just chopped this up to try to look at it for a week. Let's just say I used half of that extra time in preparing for class. Now, this could be 2 hours, it could be 1.5 hours. It's up to you how much you want to prepare. But I'm saying some of that time should be spent before class. Okay? Read the material in advance. I can guarantee you, you will get more out of our discussion together in class if you've already been introduced to the material. I won't say things the same way the authors do. I will supplement that with real-world examples. Okay? So, do spend that time before class reading the material. I understand AI is out there. I will take it if that's all I can get from you. If you want to have it summarize it for you in some shorter period of time and you don't want to read the whole thing. If that's all I get, I'll take it. But in tax, and I think in most things, don't getting too high level is dangerous because there are details. Okay? So if you're shortening things up, you can't get all the levels of details and the nuances that are really going to help you. So please spend some amount of time preparing for class. Then I was thinking about, well, what else could I do with that extra time? What about after class on a weekly basis? So what if I spent some time reviewing? Be that Fridays. I think most of you don't have classes on Fridays. What if it's Saturday mornings if I like to do mornings? Or maybe it's Sunday night as I'm trying to get ready from what I did last week and get prepared for the next week. What if I spent some time reviewing what we talked about, flipping the slides, looking at my notes for the prior week? And maybe I do that and I clean up my notes. I went to many business meetings and I would have notes all in the margin because usually I was part of the talking in the meeting, but I would jot down things, important things that are circle or star or something. If I waited for 2 months to go back and look at that, I'd be like, because my handwriting was notoriously bad, I'd be like, I don't even know what that says. Or I started that and I don't even remember what that was for. But if I did it within 2 days, and I went back through and I said, oh yeah, I remember Brad said something about that and I need to call him back about that. Or I need to do this or that with that particular comment. That is very impactful because now I'm kind of like setting the stage for the next material that we go through. So I think that's really important. And as you're reviewing that, if there's something you don't understand, game plan how you are going to understand it. You want to time with me? I got to send Professor Plunkett an email and get on his calendar. Fine, let's do that. Or you got a friend that you study with. I want to make sure we talk about that concept because I didn't get that before. However you want to address that, do it on a timely basis. Don't wait till the night before the midterm or the final when you're panicking, sending out panic emails, but do it on a real-time basis. I guarantee you, you will, one, learn the material and you'll do well in the class. Okay? So moves towards being a professional. This is that concept. I think as you leave the classroom and you go into the workforce, prepare for your meeting. Whatever meeting it is. You're meeting with HR, you're meeting with a peer, you're meeting with your manager, you're meeting with a client. Prepare for that meeting. Then during the meeting, instead of it being class, it's a meeting, be present in that meeting. Mute your phone. Don't have your laptop flashing a bunch of stuff at you. Be present in that meeting for however long it is. Just focus on that task at hand. And then instead of reviewing that meeting, what's the next steps after that meeting? Right? I never walked out of a meeting without next steps. I had colleagues that would joke about me. Because my last slide on every PowerPoint was next steps. Because I was trying to sell the next work. Right? Never have a meeting where, oh, we're done. See ya. Have a good life. No, what are we going to do after that? Right? So, next steps. That's your review thing. Like, what do we talk about? Do the things we got to do different? We got to clean that up, or are there next things we got to do? Those are great things to kind of take for that. So, I'm not just doing things here to get a grade. I know that's important, you guys. You guys are extremely focused on grades, but I want to start doing behaviors that are going to be rewarded in the marketplace. That participation, that being a little more outward. And you don't have to be the most extroverted person. Just ask yourself, can I get a little better? Because we all have strengths and weaknesses. If you could take your weaknesses and just get them a little better over time, you're going to be a much better professional. Because then you're going to have your stuff you do really well and the stuff you like here all the time. Okay? So we'll pick this up and we'll start chapter 4 on Wednesday. Please do start that time. We're going to prepare for that class then. And, see you then.
I got 2 more classes. That was crazy, right? No, I'll tell you. Later. Maybe on a dinner. Yeah, that's what I'm thinking. No, it's not. It's not that. I was not expecting that. Dude, I was like, damn. That's crazy, bro. That's all. That's kind of funny.
I'll invite you myself.